Yes, we are live.
Okay, so we can start. Okay, welcome Investment Subcommittee today. We've got quite a fulsome meeting today. We've got 3 hours set aside, so just want to welcome everyone. And want to acknowledge we have Councillor Ludlow with us today. I was going to say Lyndall, we've got Ludlow today. So thank you very much, Lyndall, for joining us.
Pleasure. All right.
Okay, any apologies today? None. Okay. Declarations of interest. Was Alistair's he's an observer, isn't he?
Oh, he's
Oh
on.
no, sorry.
Chairman, I just want to note that the agenda papers show that Alistair is a member of the
Yeah, he's
committee.
a member.
Which is not correct. I am, and he is not, but he I have 10 meetings.
Okay, so you are a member, Alistair's not.
Okay.
That's what I thought was the case.
He did attend the last
Attend
meeting,
last
which anybody is permitted to do, who's the
Apologies
councillor.
for that, Councillor Rodway. Obviously,
Okay.
your name's been sent here.
Well, it'll be
It's called the others.
Just in terms of the declarations of interest, Chair, I have a standing interest that I noted that should be noted at every meeting. That I am also a director of South Pacific.
Patrick, in the addendum in the minutes last meeting, we get to there, we were supposed to be supplying a declaration of interest, weren't we?
So we produced our declaration of interests table, and we just asked that the declarations are submitted to us on standing conflict. Cassandra, but any declarations that you want to make, send them through to us and we'll update them.
So we just have a register of interests, and we note when any interest is at a meeting. I think we need to be careful about the use of the word conflict, but an interest relates to a matter on the agenda.
Yep.
And given the content of this committee, I will probably want to see that for each meeting that South Pacific is discussed.
Excellent. Okay. Okay, public forum, petitions and deputations, anything today? No. Okay, confirmation of minutes from the meeting on the 14th of April, 2025, starting at 9 a.m.
I'll move.
You'll move it, Councillor Roy. Seconded, Councillor McPhail. All those in favour? Thank you. Any matters arising from the minutes? Okay, if not, we'll move on to the adoption of the committee resolutions. Anything to be done there today? No.
I don't think so.
Okay. Okay, notice of extraordinary or urgent business? No. Okay. Any questions? No.
You're doing
Okay.
very well, Chairman.
We're racing through the 3 hours. Okay, now we have the chairman and councillors' reports. So we will just be working through those. There's nothing to report from the chairman as such. No, nothing from councillors. Okay, we'll move into the reports. We'll move into report 10.1, the investment update, if that's okay.
So Tracy's not available, so I'll cover the report. I've just made a number of bullet points, so I'll skip through the bullet points just to explain the report. I think the report needs to be changed a little bit going forward, and I'll touch on that. So the paper summarises the performance of the JB Were managed portfolio. I think it should be noted that there's a little bit of conflation in the report where we talk about our cash and deposits and the interest we've earned from non-JB Were sources. I think we should remove that from the reporting going forward, because the report should be about the JB Were managed fund as our core investment. It shouldn't be about those other activities. So we'll correct that going forward. Of note is that the fund mix was changed during the period to be targeting growth. So the fund is a 60% growth, 40% income focused investment portfolio. Over the course of the year, the fund has increased in value by circa $3 million, from circa 31.3 to circa $34.3 million. Of that, approximately 1 million is realised income and approximately 2 million is unrealised capital gains, net of tax management fees and transaction charges. So that represents a net return of about 9.5% on the fund. The chart on page 13 demonstrates that there's been some volatility with negative capital growth, broadly aligned to market shocks following Liberation Day and announcements of that ilk before markets then rebounded subsequently. Overall return for the last 12 months is within cooee of benchmark, but slightly below. The benchmark supplied by JB Were, and I'm just looking for a little bit of additional clarification to understand how we do our benchmarking. So just noting that I am looking for a bit more detail on that. Over the 5 years, across all asset classes, the investment has returned 5.25 points above the benchmark, however. So then the other points that I just wanted to call out, the returns have been 40.09% according to the JB Were tables over the last 5 years. That indicates an average return of 8% per annum. In future, we're planning to amend this report slightly and express that as an average annual return, because it's a little bit difficult to read when you see 5 years and 40%. You really need to see what the average annual looks like. Our long-term plan assumed a 5.5% overall return, which the JB Were Fund has outperformed by 4.9%. Also worth noting that the return on the fund is expressed as a gross return before management fees of 10.4% in the JB Were supplied tables on pages 13 and 14. And we will adapt the reporting slightly in the future to reflect both gross and net return, so we can easily tie back to what has been said earlier in the report. There is an error in the paper that I need to call out, which is performance against SIPO targets. The portfolio actually averaged an 8% annual return, so it outperforms the SIPO long-term target of 5% per annum. And the paper also includes commentary from JB Were about the ongoing uncertainty in global equity markets, including the possibility of tariff-induced recession impacting on the world economy. So those potential risks and uncertainties are noted. So hopefully that all makes sense.
Questions, Scott?
Can I add a little bit to that, just before we get to questions, if that's all right? I think the benchmarks that it's comparing to are basically the standard benchmarks that we expect for those sectors of the market. So for Australian equities, it'd be the ASX 200. For the New Zealand equities, it'd be the NZX 50. For international, it would be the MSCI All World. So, it's basically what you've got within the portfolios. You've got two targets effectively. You've got JB Were trying to manage each of the individual asset classes to outperform what the markets are doing. That's kind of the active alpha or benefit they're trying to derive. And then the second one is actually, well, what's council trying to achieve through its portfolio, which is, yes, we want to get a cash return that we can utilise inside council. We want to make sure we inflation-proof the underlying reserves that are sitting there. And anything that we get over and above that, we're starting to grow the resilience that we've always talked about as being the thing that we actually need to start to grow, because as the chart on, I need to put my glasses back on so I can see, on page 13 says that there is volatility, and we saw it with Mr. Trump's Liberation Day. It didn't liberate the markets in terms of them going up, it went the other way. And so we've had examples of that inside the portfolio, and that's really where that resilience sits. So if we take some of the numbers that sit inside this report, I think in terms of what council was trying to achieve in this 12 months, it's worked very, very well. I think if you go back 12 months, you made the decision through the SIPO to move from a 50-50, as Patrick alluded, to a 60-40. and that has been favourable as well, because if you look at where the growth is coming, it's in those growth asset classes. And if going back historically, if we'd done that same thing earlier, then we'd actually be further ahead than where we actually are now. So it's a little bit of a hybrid in the sense that if you're looking over 3 or 5 years, you've got 4 years of performance under a 50-50 model, and then 1 year of 60-40. And as Patrick alluded, that 8% return is about 7% compounding. And again, against your target of 5.5, that's a positive position. The only other one I will highlight in the report as well, it talks about the fees as being 280k, I think, against 200. That's actually a combination of fees and taxes and other bits and pieces that sit in there. So council is a zero-rated taxpayer. On some of your New Zealand equities, you earn imputation credits. Unfortunately, imputation credits for council is not worth a lot. And so that number includes the tax effect that flows through, which obviously for a council unfortunately doesn't pay you. And that's why there's the variance. There is a little bit of slightly higher fee than budgeted, but that's because the portfolio is slightly bigger than budgeted and you pay on the dollars that you have invested. Sorry, extra clarification.
No, that's excellent. That's excellent. Any questions?
Two from me. One's a comment really. So the long-term plan has budgeted, allowed, allocated, hoped for 5.5 return. This is actually showing us that historically it's producing 8. Past market performance is not an indicator of future, but I think council needs to think about that if it's fretting it doesn't have money to spend, or thinking about what its rating should be. I think that's an interesting thing for us to consider going forwards. And then you said very wisely, Patrick, that you're going to take out the things that are unrelated to JBWere when producing a JBWere report. Can you just highlight for us what those things are? Is that the line that's petty cash, or is there something more than that?
So page 12, cash and deposits, and the check account, retention accounts, petty cash, etc. But also
So all of that, 3.1.
all of that. And then in the second table, where it says other income interest received, that's interest that we've received not related to the JBWere.
So where do you report to us on the performance of that?
I am happy to be corrected, but I don't believe that that's core to our investment management. So in terms of managing our investments, we've got Southport, really. It's a big investment for us. We've got the JBWere fund, and we've got our property. So those are the areas that we invest in. But in terms of our treasury policy and approach, how we manage our cash, and so on, I sort of see that as a finance and performance committee matter. So I'm proposing that we keep our reporting and actions on those items to that committee and not bring them here.
People comfortable with that response? I think that seems a sensible response, because I said that the actions out of your report, Patrick, was to strip out, they call it the sort of the non-annual, the non-JBWere managed stuff, report on an annualised basis over the multi-year, and then present in a gross net report. Is that what I heard you say also?
Mm-hmm.
Yeah. Which by default, as you say, what you referred to, Scott, was pulling out the, call it maybe fees, but if the taxes and everything is included in there, it's just quite transparent around that. Is that all the actions that people have captured out of Patrick's report? This was good, Patrick. What are your sense of as an investment committee, if we can just build the process so that the reporting nature is easy to pass on when there's a change of either management and councillors, so that the process is built, so that then there's no loss of institutional knowledge or the way the stuff's being presented. And that'll go across a whole bunch of our discussions today that will come into the investment portfolio, the Southport, and the land that we're considering maybe discussion around later. If we can just build those disciplines, would be of value. Anything else from the investment update? If not, are you happy to formally receive, confirm the investment, receive this report? Moved Councillor McPhail, seconded Councillor Rodway. All those in favour? Thank you.
Just in that we are
Yeah,
minuting
it's a
the
mistake.
compliance with the cycle, aren't we, and receiving that report? It's always a very wise thing to
Minute,
listen to note.
Okay, yep, minute, the compliance with SIPO. I did ask that question privately because there is obviously the degree of discrepancy with SIPO is may I advise it? There's a 38%, 62 on the 40/60,
Yeah, it's normally plus or minus 10, so.
plus or minus 10, yep.
Yeah, and then you have probably a plus or minus 10 on each of the underlying asset classes, like
Yep.
global equities, for example, would have a plus or minus 10 too.
Oh, okay, well done, thank you. So let's note that in receiving the report. Okay, moving on, we now have the property report.
So I'll just make some brief comments on the property report. So just for clarity, the request to produce the property report came out of the Finance and Performance Committee. And the production of that paper was primarily that committee and was discussed in that committee earlier today. The reason I've also put it into the Investment Committee papers is that property is one of our key areas of investment. And it's really for noting and for context, but just wanted the Investment Committee to be clear on our approximate land ownership and the return we generate from that land ownership. So headline numbers, we own about 4,500 hectares of land. QV valuation on that is circa 60 million. And our return on QV, expressed as a percentage of QV value, is circa 1%. There was some discussion at Finance and Performance about why the expense associated with the leased income is so high relative to the leased income. And that has generated a bit of additional action in terms of us diving more deeply into the numbers and generating more reporting. So that's worth noting. I think those are the headline numbers to be aware of in terms of what our first report has produced.
Okay, any questions around this report?
Quite a few.
Yeah.
The first one is, how do we strike the rental rate to those landholders that are occupiers on that rental land? What's the way in which we actually do that? Because a 1% return on rural property is quite low, but we do appreciate that there are other issues like the potential to flood and all of that. So how do we actually go about striking a rate? How often do we review it, and how long is it since it actually moved?
Yeah, so good questions. So my understanding is we get evaluations done periodically on these properties that advise us what the market rental is, and we take that into consideration. So I've seen a couple of examples where those valuations have been done, and they've identified how much we should be receiving in terms of lease. I don't know how systematically and how often that is done, so that's something we're investigating in terms of the next report. That's my understanding, is that we get a valuer's indication of what the lease income should be, and that is used to help us establish the annual lease. To your other point though, a lot of this land is flood prone and otherwise marginal, so those will be factors I believe when we take into account how much release the property will. But the next report we're producing is intended to go into that in more detail and give some more definitive answers in that space.
So another question, if I might.
Yep.
So from time to time, as council, we've talked about how we might maximise by doing something in the carbon credits area, both in terms of either wetland or forest. Now, so where does the initiative for that sit with? Is there an expectation that this investment committee is going to produce some concepts back for council to tick off, or are we waiting on instruction to do that, or is there a bit of a hiatus sitting there about actually getting something going in that area?
Okay, so my response to that would be, this is our second investments committee
Yeah.
meeting, and so we've got the 3 portfolios that we are in effect responsible for. So yes, we should kick off exploring what our
Right.
opportunities are and then make a recommendation to the council. Councillor Rodway?
Yes, we talked about this quite a lot this morning. And as Patrick indicated, that resulted in a recommendation to undertake further investigation into all of these questions that Councillor Roy is asking and others. It's still a bit uncertain in my mind to the responsibility of the investment committee compared to the finance and performance committee on that. So we're looking at this, I understand, as an investment and whether or not the investment is performing as it should. The other committee, the finance and performance committee, would be looking, I think, at the sorts of things you're asking, Eric, about what else we could do with this land, and taking into account its propensity for flooding, the fact that it's got a lot of native forest on some parts of it, particularly the Lower Mataura wetlands as well. So but the work that the committee this morning recommended that Patrick do will look at all of those things, that's my understanding.
Sandra?
We get a really clear mandate in looking at the JB. We are saying this is what the SIPO says we're trying to achieve out of this asset pool. And these are the risks we're trying to mitigate, and these are the risks we're willing to take to get this sort of return. Part of, I think, the, I'm not going to call it confusion, the uncertainty as to boundaries or options here is because we don't have that identical mandate for this, and it's a new thing that this committee exists, and council, you have chosen to put the property within this committee. So in my mind, there is actually a bit of a strategy piece that needs to occur around what are our investment objectives here. And there's 3 parts to it. The questions that Councillor Roy asked are actually about how do we optimise under its current use the returns we're getting for it to be leased in the way it is. And then there might be another thing about what's an iterative step there, that are those blocks the right shape and size, and could we take out the most flood prone pieces and do things differently. And there's actually saying maybe they're not leased at all. Maybe they're used for water storage or carbon credits or something else that actually means we get a 15% return. And there's no decimal points in that table. I was wondering how many of those ones were actually 0.8 or 0.6.
Yeah.
So I think until we have that high level strategy, we're probably going to keep asking ourselves these questions.
Yeah.
And they're not mutually exclusive. So we can actually think, while we're figuring that out, because that won't be a 1 or 2 investment committee piece, it'll probably be a 1 or 2 year piece. While we're figuring out some of those bigger pieces, we've got to optimise the current model and get the most we can out of that while we work on some of these bigger pieces.
If I can just make a comment, there is a bit of overlap with this too, in terms of the Leading on Our Land initiative that parts of our organisation is getting underway. I think your point's a good one. I think essentially what the report tells us is, for better or for worse, if we believe the data in the ledger, then we're generating a net 1% per annum against what these properties are valued at in QV. Can we improve upon that in the short to medium term? That's an investment type conversation. How we want to use our land overall, and whether we want to plant some of it out to achieve those environmental outcomes, whether we want to look at getting those credits, and whether we want to decommission some of the land for environmental reasons. That all needs to be part of our Leading on the Land's strategy and approach to our land, and there'll be overlaps with what we're wanting to do from an investment point of view, but it won't all necessarily be driven by what the returns that we want to achieve on the land. So there is that dichotomy, I think, between how do we actively manage the leases we've got now, improve the return where that's possible, and do some very tactical things around that, and keeping that a bit separate but connected with how strategically we're going to choose to use the land portfolio that we've got over time.
Jeremy?
Yeah, just to give you a 2-minute history lesson on this. I know fellow councillors would have already heard this. Going back to 2016, we turned up. They were, I think that year they earned $70,000. And I didn't even know they owned a hectare of land. And so we eventually set up a property working group, and I chaired it. And the lease, we went through lease documents. They had lease agreements, and then they were given, some of them were up to 33% good stewardship discounts. And I said, what the hell are you doing that? It's the lease document makes you a good steward. It should have all the rules in play. So over the last, I think we determined, agreed that we drop the good stewardship over every 2 years, drop it down. And I think most of them probably be off by now. So I've talked with Patrick in regards to these numbers. I don't agree with these numbers, from my knowledge, because we've got a policy of only spending up to, and I know we have, up to 25% on maintenance against whatever the gross income is. So in 1.381, it's only 345,000. So there's $500,000 there. I'm struggling to see where in expenses, which I know it's not going to move much to the 1%. Might be closer to 2%, might double it. And yeah, the rounding up, it's all rounded up, those numbers too. So we've done a lot. We've done a lot, and it's actually earning, put it nicely, than what it was. And I had an objective. I thought when I saw it, I thought if we could earn $1 million, let's bring it back into reserves and then compound and leverage it. You go and I think it's 2 LTPs ago, we didn't even have lease land as an investment, as a part of our assets. I argued pretty hard, why the hell haven't we got this in our long-term plan discussion? So we've come a long way as a council, considering we've owned this for about 40, 50 years. In the last 6 years, it's been let's just say it's been managed a lot better now. But Patrick's learning a lot from the lease of Vivian, and he understands and I'm willing, myself, I've got a lot of information from the past managers, and I'll work with Patrick to just nut out some of this and get a bit more clearer numbers. So and hopefully there is land, there's huge potential, investment in forestry or whatever. There is steeper ground. It's not all floodplain. There's things like that. So, and we've got $7 million in reserves associated with lease reserves. They could be invested in there to get a better return. We'll buy more land too. So, that's just my give it a wee clarification.
Thanks for that, and I'll go a little bit of it, but thanks for giving context around that. To move from 70,000 income to 1.3, that's pretty stunning. And then having policy around spend or
We did stop things and try and alter it, make it. We're on a journey, and it can be improved. It has to be honest.
Excellent. Lyndall?
Thanks, Chairman. Just a couple of things. A bit of a chicken and egg situation for us, really, after the discussion this morning about some of the more operational pieces that Patrick was alluding to before, versus your very good point about having some strategic direction and guidance like we have for the likes of JB Ware. So at one point I was thinking, well, we need to decide the leaving on the land stuff first before we just set the investment kind of strategy, and then I was like, well, actually no, we need to set the but my feeling, actually, given that we're in an election cycle, and with greatest respect to my colleagues and I often come in with little to no expertise in any particular area. I think perhaps some really clear investment guidance about what we would expect out of this area of our investment would be really helpful to incoming and existing, actually, councillors, so that they can then it's terrible. They can make decisions on the more operational side of things, but some people might see it as being around the other way. I think my preference is for the investment strategy to be really clear, so that and expectations, so that the practical stuff can be made to fit as best, take best advantage of it.
Excellent. Alistair?
I think when Andrew and I went to university, I can tell by the hairlines that there was a simple relationship in leases. Leases run on 3% of the land value. So if we go to QV, we should be getting in 1.8 million. Now, if the leases are discounted because some of them are wet or whatever, it should be reflected in the QV. So that should bring that down and operate our 3%. So that gives us something to aim at. I did a simple calculation this morning that the dairy farm there that's receiving $153,000, even at $350 an acre, which is quite low, we should be getting $517,000. So we seem to be a way off. And that's no fault of anybody sitting around here. We've really got to go back, reintroduce, and I suggested this morning that we put in Federated Farmers lease documents, so that brings it up to a position that is modern. And all the modern things are happening, like the use of overseer and all these sort of things. Because with us, as an environmental outfit, then we should be at the top end, not the bottom. So there's the whole thing just about has to be thrown upside down and start again.
Scott?
I think part of the purpose in establishing this committee is to try and earn more money for council. And there are a number of investment assets there. And we've moved from being an asset owner to an asset manager. We're moving to be an investment manager on some of these things as well. And that basically means that you start to look at how do you move the levers. And investment into land can generate greater returns, whether it is forestry, it is wind, it is solar, even in the south, all of these things are options that I think become part of how do you ultimately grow a greater return for council. And I know, we're having a discussion later around an asset in terms of how do we utilise opportunities there. And I think this has exactly that same piece. There's a broader investment strategy piece that's got to sit across the top of this work to then work out how all the levers are then pulled to maximise the long-term value through the next long-term plan.
Sandra?
Chair, I'm just wondering, it sounds like there's an action that's been identified with the exits with Scott or Patrick, just for clarity for the minutes.
Yes, so I was just trying to summarise all this. I'm trying to just work out, we need a clarity of intersect of the responsibility of the two different committees, one being the Finance and Performance Committee and one being the Investment Committee. I think we have clarity around that, but let's just cement that. The second part is, look, this is an excellent report because in much as Councillor McPhail questioned the numbers, let's just build on the report because this is the desktop of information and irrespective of what decision we make after the fact, this is the Bible we work off and then make change afterwards. Councillor Crowley, I was listening to your suggestion of effectively when the statement of investment portfolio objective is SIPO right across our portfolio, which is Southport, managed funds and their land assets. And if we had objectives for all of those collectively, we would see that one may be performing at this, one may be performing at this, one may be performing at this. Is that what I was hearing?
So ideally you do have an overarching SIPO, but you could actually have just a sort of sub.
SIPO, yep. And then we charge ourselves the interim, we're working with known knowns today and challenging known returns in existing structures. Then the question is, what do we want to do a strategy piece around the land use change potentially if you wanted to maximise returns? Is that what I was hearing?
Yep. And if I can just add, for me, it all sits with Patrick.
So there's one thing else.
I'm just,
so you're shaking your head. There's one thing working within the known parameters of today and current lease arrangements. So let's maximise those. Yes. And then the second thing is then do a strategy piece around if people want to consider significantly changing land use to enhance returns, let's do a strategy piece on that.
I think we've got to get to the correct lease value before we start that. Because I think it's all over the place.
Yep. So that was point two. Let's work within the known parameters and maximise the returns now.
We'll get to that.
Well, I was just gonna say, like, let's get to the right lease value as well, but thinking from a leaseholder's point of view, I don't want to hit them 1 year with this is where we're going to, and then the following year saying this, but we want 5% or 10% for trees or wetlands or solar panels or something else. I think we need to put that work all together so that we can go forward and present a very clear picture, because we do have to manage expectations of our leaseholders as well, and it could be quite disruptive if they don't know what's happening.
Yeah, so your wise counsel is do all this.
Well, I think
together,
that
so-
piece of work
yeah.
needs to be quite comprehensive.
Can I just support what I think Patrick's going to say, and that is that I think when we talk about significant land use change, we need to be careful, because what we need to do, in my view, as this committee, is provide investment advice on what the options are.
Yep.
Benefits for you as council as a whole to consider about the leading on the land change.
Correct.
But to not do that means you're making a decision without a key part of information. So we do need to do that first, but the extent to which we may want to implement some of the things from a fiscal perspective that are really good from a fiscal return, i.e. making money, you may choose not to do because you want to have a bigger gain in the environment side, and that's not a decision for this committee.
That's correct.
If I can just comment, I was going to make a very similar comment. I think you can absolutely ask us to look at some of those questions that you raised. Are we getting the return we should be from the land? Question mark, need to investigate. Are we spending at the level we should to maintain these leases? To Jeremy's point, question mark, need to investigate. And those actions came out of the F&P committee this morning. So first question, the first overall landing we need to get to is, are we getting as much out of these properties as we can in the current paradigm, in terms of taking into account that they're flood-prone land and that there's a bigger piece of work happening in the organisation around leading on our lands. Strategy, I think we're jumping too far ahead if we put an action down to start looking at strategy to potentially repurpose that land and so on, because that then bumps up against other work that's going on around leading on our lands and so on. So I think let's be clear in the first instance, we're getting the returns we should be today, and then that can lead to some further dialogue about how we want to use these lands in the future. And in the meantime, let's just make sure that we any strategic work we do on this aligns with other work that's going on around leading on our lands and so on.
Can I slightly challenge that? I just want to hear what the committee's view is. I slightly push back on that. We will never be making the decision around this. We will be advising council. So I think it would be responsible that we consider some of the options in a strategy piece. And then that is for council to consider what they want to do. I think if we don't do the strategy piece and don't do the opportunities, we are effectively not fulfilling our duty of considering all their opportunities as an investment. Can I just test that with the committee?
Yep.
I agree.
Agreed.
Well, Mr. Chairman, we might need to alter the recommendation, because we did this morning actually. It just says consider how the information could influence further use of the need. There's been some really good input here, and what you kind of said need to be encapsulated in this recommendation, I think. So there's something specific for the staff to work on. They know what they have to do, and it's very clear.
Who's really good at reading back to me action points? Anyone?
There you go.
Well, we don't have to include them all, but we need to encapsulate, and I think you did it quite well just before.
So my action points out of this was clarify the intersect between the two committees.
Yep, that was one.
Yep. Second one was acknowledge and build the resource of the information platform that then informs any decision after the fact, which is effectively what you've got here, and just clarify the numbers. Number 3 was then, to your point, Alistair, was maximise returns within existing constraints, or the existing parameters of expected land management. And the 4th was then to do a strategy piece, not to make decisions, but to inform council as to potentials of investment opportunity use with the land. That's good. is the committee happy to receive the report and then note those actions?
I do that, Mr. Chairman.
Councillor Rodway,
I'll
sorry.
Just
any-
make a quick comment. The really, yeah, it's great in this investment committee. We've got other things going on. Staff are, we've got, our brains are working overtime on where staff management may want this land to go and where investment. And a good example, 120 hectares was taken off here just overnight. It's a wetland. It was taken from a leasing in conjunction with a leasing. It didn't really affect the overall return. So there's decisions being made with no plans for that land, which is a bit annoying from a councillor perspective. So there's a lot going on to understand what do we want to get out of this land. And it doesn't really add, but it's just what we're trying to deal with. And obviously, with respect to the councillors, in elections, some of us are going to be here next term already and just trying to.
All right, show off.
No.
It's all right for you, you didn't get challenged.
I know, well, I must be doing a good job, but they don't care. I don't know. But thank you. This is not mine, isn't it? So,
Are you comfortable with the?
yeah, I am. And just to give an example, the numbers why it's even skewing that there's only one dairy farm, and it's about 150 hectares here. If that, so we haven't got 600 hectares of dairy land. I know that for a fact. There's one farm, so there's little things like that. The accuracy of numbers is so I'm sort of getting a bit skewed at the moment. We just got to get those numbers right for a start.
I just think we should also note that we have a piece of land at Tiana that's not flood prone. And it may be the most valuable piece of an asset that we've actually got, and we're not really earning anything off it.
$6 grand.
Yeah.
$6 grand.
Okay, so that will be captured within the first part.
Yeah, no, I
Yeah,
just
yeah,
don't
the
want
second
us
part,
to
sorry.
lose that.
Okay, so then people are happy, the committee's happy to receive the report, and we have listed those actions for the next piece of work out of there, those four
So do
actions.
you want to change the recommendation because the action is different from the recommendation?
Yes, I think we want to minute those action points. Is that okay? Is the committee happy with that?
Yep.
Okay. Do I move on? Sorry,
So
Cassandra.
sorry, the first recommendation is receive the report. I think that's easy.
Yeah.
Consider how this information contained should, we have done that, but we've actually actioned out of it. So how do you normally cope with that? Different councils do it differently. Whether meeting actually comes up with the action that the considerations asked, do you normally, as long as the action's there, I suppose it doesn't really
Yeah,
matter.
You could add a third recommendation
Action
as those action points that
Three, another.
Andrew mentioned.
We've done 1 and 2.
sorry,
Well,
We've
your,
considered.
the ones that you mentioned should be the third point of the recommendation.
okay, so that's good, the clarity. Receive the report, consider the information contained in the report, influence the future work, and then we've listed our future work in number 3, which is the 4 actions that I hope we've captured. Is that okay? Somebody happy to move that?
We've already done that, I think.
We have.
Did we? Okay, all those in favour?
Aye.
Thank you. Well done. Okay, now we will do the Southport investment report.
This is relatively high level. What it is publicly available information. So it's looking at basically those listed ports and putting a comparison of Southport as an investment asset for council up against those, and just looking at the market announcements that were made by Southport during the period. So no surprises in this, but look, obviously the share price raised significantly at the end of June, valuing the council's investment at 126 million, which I think is a very, very positive result. If you look at in comparison to other ports, all ports have actually done very, very well this year in terms of their share price movement. So there's Marsden Maritime is a little bit unusual, and it's actually was subject to a takeover by Port of Tauranga and its parent entity, Northland Regional Council, and an iwi group. So therefore that revalued it back up, but it was probably sitting at quite a depressed price prior to that. But if you look at the rise that you've seen here, it's very comparable to what you've seen in some of those other major ports anyway. Still very light liquidity within the portfolio. The port has come back and announced to the market that one of the directors, Claire Kearney, is stepping down after 9 years at this election cycle, and they will be going through a recruitment process for that. And they did provide an earnings guidance on the 25th of June, which has put, this is their second update for the year. So they moved from initially a 9.3 to $10.3 million range to saying they'll be slightly above that to now saying they'll be above or at 12.5. So, and that announcement from the port will be once they've had their board meeting and work out the numbers, and that'll be the next 48 hours. So that's it. The only other media that was there was some commentary around from Calder Stewart, trying to announce development of some of the Calder Stewart land in Milton for an inland port, but interestingly, the Port Otago were not overly enthused in terms of their initial support. But that is, I'll take any questions if there are any on.
Any questions on the Southport investment?
Probably a wider question as to why there's been across the board an increased interest in terms of returns for all ports. What's the driver of that?
Look, ports historically price, because they're generally a dividend earning entity, and so they tend to fluctuate almost in the opposite way to what interest rates go. So interest rates are coming down, port dividends tend to be pretty stable, and so therefore they start to look more favourable, so people buy them a little bit more. Same with energy companies in New Zealand. So that's part of the drive, and you are seeing a little bit more stability in ports pricing. You look up in Auckland, for example, Auckland Port is starting to charge more for the services it provides, and that's starting to flow through to other ports as well.
Any other questions? Okay, if not, we will recommend the Investment Committee resolve to receive the report, Southport Investments, updated 31st of July 2025.
I'll move.
You'll move, Councillor Roy, seconded. Councillor McPhail, thank you. All those in favour?
Aye.
Okay, now we'll go to the annual activity report. Patrick, you're leading this, eh?
Yes. So, in previous committees, there've been a couple of items raised and they've been added to the report. So they're at the bottom under other on page 34. So the reserves deep dive, I'd like to propose that we do that as part of the Finance and Performance Committee, because I think, Jeremy, essentially what you're asking for is an understanding of why we're holding those reserves rather than investment implications of those reserves. Would that be?
Reserves, you're talking about the lease.
You previously requested that we do a deep dive.
Yes. No.
If I can help with my recollection of the conversation, it was understanding what were notional reserves, i.e. reserves that do not have any legal or either contractual or legislative requirements that they be held and only used for one purpose. So there was reference before to a leasehold reserve. Maybe that is only able to be used for those properties, or maybe it could go into the JV Weir account, or maybe it could go elsewhere. So understanding restrictions, how they came about, how they've been added to, how they've been managed through time, and what the ability is for them to be deployed either within that portfolio or across.
If I can add to that, I think it was also around disaster reserves and those that we technically are they covered by insurance. You know, are we saving holding money that we actually don't need, understanding what it's going to cost, and all those sort of things. Is a lot of those. I think it's around more the catchment liaison reserves. We do have a surplus. We've designed use of surpluses for lease land. We never had anything, and that was part of the working through all lease land stuff. So we do know what it's to be used for. We can use it now too. So, but the discussion to know all these reserves where it's all at.
So the other side of the reserves, council has a whole lot of reserves. Those reserves are actually your managed funds.
Yes.
So if you think of, and the reason that your managed funds are a 60-40 asset allocation, is that in a lot of cases, the expectation of some of those reserves that they're not going to get spent tomorrow. If they were going to be spent tomorrow, you'd have a 20/80 asset allocation or 100% cash allocation. And so they kind of looked at on the basis of what is the anticipated duration. So a disaster reserve, you know, is not going to be used tomorrow is the plan. And so, you know, you're able to invest that for a longer term. But that's why within the SIPO and within the managed funds portfolio, you have two components that you're trying to, or three things you're trying to achieve. One is you're inflation proofing that asset because you've either generated cash in the past and you want to preserve the buying power of it, or you've target rated something in the past and you want to preserve the buying power of what you've taken off the ratepayers. You're generating a cash return for council so that the current ratepayers of today get benefit out of actually looking after that asset well. And if we get a third piece, which is the resilience over and above, so this year we've just looked at JB Ware's given us a 10.5%. We had a 5.5% kind of target. And so therefore we've grown some resilience, which will give us that volatility reserve or, you know, rainy day or you know, whatever it happens to be. So it is, they do all interacts together. I think it is about how can you spend some of those reserves. It's also part of that question.
Yeah, so I'll go to Patrick and come to you, Linda, is that right?
So just a couple of points. So thanks for the background and context. That's useful. So Scott, just to make sure I'm understanding what you're saying that depending on what we determine the reasons are for holding these reserves may change the risk and return portfolio, how we choose to hold them within the portfolio, risk and return.
Yeah, absolutely. So it's
so then does that, in terms of our 60/40 overall portfolio, are we able to make amendments to that? It's a question that
and the SIPO anticipates that is something that you look at every year to make sure that it's still, you know, you're not putting too much risk into the portfolio as a result of how you anticipate the reserves being used, etc. So that is an annual process.
Okay, thank you.
Linda, did you?
Thanks. Yeah, just as in terms of the activity report and your Patrick's desire to do that reserves deep dive in F&P, I think that's the best place for it. Because there's a whole lot of questions about that point of critical mass for the reserves, you know, how much is too much to have in there, and council, we had this term actually haven't really had a good look at that. So there's a lot of knowledge needs to be shared with the councillors before that those recommendations come to this committee as far as the hardcore SIPO investment decisions that need to be made, but there's an understanding that's required. So I'd back you up on that, taking it to the F&P rather than here.
Can I just, so I understand, can I ask a question here? Like this, the JB Mayor Managed Fund is in essence a sum of the parts of a whole bunch of reserves. All we need to do is, and I think it's appropriate we do it in both committees, because there's an expectation of return, there's also a liquidity conversation or an aspect that we would have to understand too. So I think it's appropriate that we have transparency in both committees. I think the simplest way in my head, a small head, is it's a sum of the parts. Let's just get clarity around what those sum of the parts are and the expectations of when those things may be used or not need to be used.
Could I suggest that we do that as a joint venture then, rather than have Patrick have to do it twice, or whoever do it twice?
If I can comment, with that additional context, I'm now understanding why it was asked for. I think there's some value in bringing it back here. So I'm comfortable to do that. I had thought without that context that it was being asked for because there was curiosity about why we're holding the reserves and how funds have been released from the reserves and what for, which is more sort of F&P operational matters. But that context is given some clarity.
Please don't get caught up in the operational.
Okay, so everyone happy with that answer? Okay, Patrick, you had some other points on here work to do.
Look, the other one I just wanted to raise that's been on previous minutes is the one that you've raised, Cassandra, around LGFA borrowing, with the council considering borrowing on behalf of the port. So I've put it on the list. I think we can go away and look at it. I suspect there are probably some fish hooks associated with it, but I just noted that it was sitting there, so I've added it onto the activity report.
It's good to have on the list. There are other similar entities and similar positions that do it from other councils, which I'm probably happy from a South perspective to put you in touch with the LGFA about.
Okay, so those are two signal pieces of work along with all the other signal pieces of work that will come back at the November meeting. People comfortable with that? Busy meeting, I'm thinking. Okay, any extraordinary or urgent business? Oh, sorry, apologies there. Can we just pass that recommendation then to your mover? Receive the annual activity report. You moved by Councillor Roy, seconded by who was it? Councillor Rodway. All those in favour? Thank you. Okay, extraordinary and urgent business. Anything there?
We're going into it.
Okay, now can we go into public
We
excluded?
need someone to give us a reason, then we
Yes.
can move it.
In front of you.
Reason we're going to public excluded to prevent the disclosure or use of official information for improper gain or advantage as under section 7(2)(j). And I'm just going to hit the live stream.
I'm happy to move that.
You move that we move into it. Seconded, Councillor Roy. All those in favour? Thank you. So we'll move into public excluded.
Now we wait till someone turns this